Well, neutral reserve assets have to play a bigger role in the global economy and in global trade. We're talking about gold. We're talking about Bitcoin. The dollar has to get weaker. If you want labor to be valuable here again, the dollar's got to go down. The dollar's down 10% since January 1st, 2025. This was reported by Peter McCormick. He said that Bitcoin is the new oil. And so if you go back to this and you see Trump says that Bitcoin takes pressure off the dollar. My interpretation of this is pressure off the dollar means stablecoins take pressure off the U.S. financing its deficits. Why is Bitcoin the new oil? Well, because oil, like the petrodollar was a way for the U.S. to finance its deficits.
Right now, the U.S. empire is staring down a harsh new reality, and Bitcoin might just be its wild card. That's the jaw-dropping take from Jack Mallers in his latest Mailbag Monday. Forget the usual fluff. Jack dives headfirst into the messy geopolitics behind the scenes, revealing America's slipping grip on global power. The culprit? China's ironclad holds on rare earth minerals. Jack highlights a Wall Street Journal bombshell. China flexes chokehold on rare earth magnets as exports plunge. These aren't just shiny rocks. They're the secret sauce behind iPhones, electric cars, fighter jets, and even modern military tech. Remember when Senator Marco Rubio warned America can't sustain a long fight without China's rare earths? Jack thinks that's exactly why the recent Israel-Iran conflict cooled off so suddenly. Israel's missile stockpile was running dry, and China probably whispered, "Hands off, or no more minerals." But wait, there's more. China's been locking down its rare earth engineers. No passports, no leaks, no knowledge escaping. Meanwhile, their $1.3 trillion sovereign wealth fund is slamming the door on Wall Street, pulling out billions from Blackstone, Morgan Stanley, and others. Jack yells, "We told you!" Because China's cash used to prop up the dollar and U.S. markets. Now, they're unplugging the lifeline. With Trump's America First message pushing China away, the flood of capital leaving the U.S. is shaking the dollar, stocks, and bonds all at once. The empire's foundation is cracking. Without rare earths and that financial muscle, America's global dominance is slipping fast. But here is the big question. Can Bitcoin really fill this vacuum? Or is this just the beginning of a much bigger shakeup? Now, let's watch clips from Jack Mallers' explosive podcast to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
I just wanted to circle back on this topic and bring back the concept of these rare earths that China seems to have a chokehold on the rest of the world. It's really not clear to me that Wall Street and the world more broadly is appreciating the reality that we're living in. So to put it simply, this Wall Street Journal article, if you see China flexes chokehold on rare earth magnets as exports plunged in May. The subheader reads, curbs on magnets used in EVs, jet fighters are at core of recent U.S.-China trade tensions. Now this was June 19th, so not within the last week, but close. But I just wanted to resurface the fact that China seems to have everyone by the gonads, especially when it comes to war. We heard on this show, we played a Marco Rubio clip where he said the U.S. can't actually enter war for any sustained period of time without China rare earths. And the fact that this is at the nucleus of the trade war is critically important. And the world really needs to deeply, deeply, deeply understand the leverage that China carries. So I go on. We see Israel and Iran claim victory as ceasefire takes hold. The New York Times. Iran's president signaled that his country would be open to talks about its nuclear ambitions. A preliminary classified U.S. report concluded that American airstrikes, had not fully destroyed Iranian nuclear sites as President Trump has claimed. Now listen, I don't know whether the airstrikes actually destroyed Iran's nuclear program. I mean, come on, what are we kidding? I don't know, and that's not the point of the show. The point of the show is I thought the ceasefire was a little peculiar. Trump announced victory, and then all of a sudden, Iran and Israel were still throwing missiles at each other and bombing each other. It didn't seem like Israel wanted to ceasefire, but Trump claimed a ceasefire victory. And then all of a sudden, Iran said, you didn't actually hit anything of ours. You're bluffing, you're faking. It was a little weird, wasn't it? It was a little weird. Hey, not a political show, but it was a little weird. And my point is this. This is an idea from Luke Groman where there's another interpretation of what happened between Israel and Iran is that nobody could go to war unless China is willing to give you the rare earths, including the US. And so what actually happened is China said, yo, we need to get our oil from Iran. And so everyone's going to stop war because we want our oil. And we're not supplying rare earths to any of you bozos. And Trump obviously is going to spin it as credit. China's $1.3 trillion wealth fund retreats from Wall Street. Loyal Jack Mallard show listeners, are we going to say I told you so? No, because that's not who we are. We would never say that. But we told you so. We told you so. What did we tell you? As a reminder, listen, the U.S. has problems because it's the world reserve currency. The world reserve currency status gives artificial strength to the dollar and artificial strength to dollar assets. How? Why? The U.S. structurally runs a trade deficit. When you're the world reserve currency, you have to structurally print dollars or whatever the currency is and hand them out to the rest of the world. If the rest of the world needs your currency, how does the rest of the world get your currency? Well, your job is to issue it to them. So you don't actually export real goods. You don't run in a surplus. You don't do more proof of work than you import. You just print paper effectively on net and you hand it out. Now, everyone is getting what you can all think of as U.S. store credits. These U.S. store credits aren't good in China, aren't good in India, aren't good in Russia. China doesn't want to turn around and use the dollars to invest in their local domestic economy because it will strengthen their currency. It will weaken their export business. It'll make labor, for example, a lot more expensive. So they have to take the dollars and they have to invest them right back into the United States. And it used to be, just deposit them into a bank, deposit them into U.S. treasuries. But now all of a sudden, no one wants long duration treasuries. No one wants to be part of the U.S. banking system. And China has been buying all sorts of U.S. assets, scarce assets, the Mag 7, real estate, land. Check this out. China's $1.3 trillion sovereign wealth fund spent years as one of the most sought after investors in the world. It owned massive stakes in Blackstone and Morgan Stanley, struck deals with Goldman Sachs, and plowed tens of billions, that's a B, billions of dollars into funds across Wall Street. Okay, so if Trump wants to shrink our deficit, get back to a surplus nation, if Trump wants to bring manufacturing back into the United States of America, we've talked about this endlessly on this show. What does he have to do? Well, neutral reserve assets have to play a bigger role in the global economy and in global trade. We're talking about gold. We're talking about Bitcoin. The dollar has to get weaker. If you want labor to be valuable here again, the dollar's got to go down. The dollar's down 10% since January 1st, 2025. What else has to happen? You have to renegotiate trade with China. Either tariffs, which will bring their revenue down and our revenue up, or capital controls, which will kick their capital out of the country. The America First trade policy that Trump implemented in February basically said, in more or less words, China, get your money out of the country. Now, China has said, okay, look at this headline. $1.3 trillion wealth fund. Okay, we're out. What happens? Dollar down, stocks down, bonds down. Dollar down, stocks down, bonds down means money's leaving America. Stocks down, but bonds up, that means money's going from risk on to risk off, right? Everything down, that means foreign trade surpluses that have funded American exceptionalism over the years are saying, okay, this monetary regime is over. We get it. Goodbye. We're going to buy gold. We're going to buy Bitcoin. All you need to do is look at a chart to see that I'm not making this up. This is literally factual representation of what's been going on. Now, what's fascinating is, first of all, for people to say, Jack's such a hater. American exceptionalism wasn't in part funded by the trade surplus of our partners around the world. That's the most ludicrous thing I've ever heard. Oh, really? Until you realize that China's sovereign wealth fund is the one that owns not majority, but massive stakes in Blackstone, Morgan Stanley, Goldman Sachs, to name a few. Oh, whoops. You didn't realize how much of your 50 times tech stock earnings were funded by China? Oh, whoops. And when I say, yeah, so the stock market is going to get obliterated, you say, bro, no, it's not. The stock market keeps going up. In dollar terms, it keeps going up, but I guarantee you it's going to get smoked in Bitcoin terms. It's going to get smoked in gold terms. In fact, it already is. Over the last 5 years, stock market's down 85% against Bitcoin, and we're just getting started. I guarantee you the Bitcoin smokes the Mag 7 over the next few years.
So, where does Bitcoin fit into all this? Jack says the answer came straight from Trump himself when he admitted that Bitcoin takes pressure off the dollar. And that sentence says everything. The dollar needs to weaken to make the United States competitive again. However, it can't fall too far against other currencies that are still backed by dollar reserves. So what happens? Bitcoin and gold become the release valve. Their price goes up, absorbing the pressure that can't be directly applied to fiat. But there's another layer to this. Jack explains how stablecoins, like Tether, are becoming America's quiet weapon. Treasury Secretary Scott Bessent even predicts the stablecoin market will grow to $3.7 trillion. Why? Because billions of people, such as cab drivers in Argentina and barbers in Turkey, are buying Tether to cope with inflation, and Tether uses that money to purchase U.S. treasuries. In short, these individuals are unknowingly contributing to the U.S. debt. And the real deal is that Tether's growth is tied to Bitcoin's price. The higher Bitcoin climbs, the more trading volume flows through Tether, the more U.S. debt gets quietly absorbed. The U.S. strategy seems clear, Jack argues. Pass the Genius Act, regulating stablecoins, and the Bitcoin Act, legitimizing BTC. This could send Bitcoin's value soaring into the tens of trillions, while creating a multi-trillion-dollar stablecoin market to fund U.S. deficits at low rates. The empire needs Bitcoin, Jack declares. It's a desperate gambit to manage decline and find new financing. Bitcoin's neutrality and scarcity offer a path that the failing fiat system can't. Let's watch more clips from Jack's explosive podcast.
This was a slew of Trump headlines all within like the same minute. You could see this 11 minutes ago, 11 minutes ago, 11 minutes ago, 12 minutes ago, 12 minutes ago. Trump, if we didn't have crypto, China would. Trump, Bitcoin takes pressure off the dollar. I'll come back to that one. Trump praises jobs produced by crypto. Trump on crypto. We have created a very powerful industry. Trump, crypto is a very funny thing. I wonder what he meant by the last one. I want to focus on the Trump Bitcoin takes pressure off the dollar. What an interesting thing to say. I then will pull in this tweet from Secretary Scott Bessent on June 17th. Recent reporting projects that stablecoins could grow into a $3.7 trillion market by the end of the decade. Okay, pause. We've reported on this before. Is the U.S., first of all, let's just take a step back. Why is the U.S. interested in stablecoins? And obviously, they're my friends, first and foremost. They're now my co-founders. We have a business together called 21. So you guys take that bias as is. In my opinion, the only interesting stablecoin is Tether. I don't know why an American would want a stablecoin. Doesn't make sense. We have Chase accounts. We have Cash App accounts. We have Venmo accounts. A stablecoin does nothing for me. I've never had, by the way, you can get, yield on your stablecoin in Coinbase. Yeah, but I can get yield on my cash deposits in Robinhood. I can get yield if I put my money in, short-term T-bills. So stablecoins deliver no innovation to me as an American with access to financial tools. In my opinion, the innovation of stablecoins is you're giving digital dollars. Listen, how do you get people access to the dollar that have Naira, that have the Turkish lira? Previously, it's pretty difficult because it's very hard to give someone in Nigeria access to the Chase account that I have. But now you have these global open networks that you can stick an effective dollar deposit on top of it. And everyone has a phone and access to download Strike or download Binance or download whatever. And so the reason the US government is supposedly interested in stablecoins is because Tether is effectively onboarding Argentine cab drivers onto U.S. debt at the scale in which they're buying more U.S. debt than Germany. So they're onboarding Argentine cab drivers, pupusa chefs in El Salvador, barbers in Turkey. 50 million new wallets a quarter. They have over 400 million, I think. I don't know. Again, I'm not necessarily affiliated with Tether. They're just my co-founders and they're my friends. I don't know the business that well. But the point is, the US is finding new buyers of its debt. These people in these other countries and markets are finding, a better savings account, a better way of life, a better quality of life. So they're like not having to live through extreme hyperinflation. It's kind of like a masterful everyone wins product. My opinion is obviously they should use Bitcoin. And so if you go back to this and you see Trump says that Bitcoin takes pressure off the dollar. My interpretation of this is pressure off the dollar means stablecoins take pressure off the US financing its deficits. Why is Bitcoin the new oil? Well, because oil, like the petrodollar was a way for the US to finance its deficits. The US said, price your oil in dollars, you'll get a bunch of dollars, you'll turn around, you'll invest those dollars back into our US treasuries, and we'll give you weapons and protection in the form of our military. That was the relationship with Saudi Arabia. And so the US found buyers of its debt with the petrodollar system. Bitcoin takes pressure off the dollar. And then to see Besant go from 1 trillion to 2 trillion to 3.7 trillion. If stablecoins were 3.7 trillion, by the way, the biggest growth for Tether is the Bitcoin price. People don't understand that. Tether grows when Bitcoin grows. Pull up a chart and look at it. The reason is because Tether has more liquid trading volume than Bitcoin on some days. The USDT BTC trading pair is like the most liquid trading pair in the world, because USDT is the trading pair for all other markets outside the US. And in many cases, it's the trading pair inside the US. I think it's like 10% of Coinbase's volume alone. So if Bitcoin goes from a $2 trillion market cap to a $10 trillion market cap, Tether's going to grow proportionately. Do you understand that? And so it is my interpretation that Trump is saying Bitcoin takes pressure off the dollar because, first of all, as Bitcoin grows, the dollar weakens. You need to weaken the dollar against something. We've talked about this on that on this show. The dollar has to weaken against something. It's not going to be able to weaken against the Chinese yuan. It's not going to be able to weaken much against the euro. All currencies weaken with the dollar. And if the dollar is going to remain the world reserve currency, it's going to have this artificial strength. So there has to be an escape valve. It's going to be gold and Bitcoin, in my opinion. Just because Bitcoin isn't quite yet, it doesn't have the muscular skeleton to be purchased by central banks yet. Central banks have been buying tons and tons and tons of gold. Bitcoin's just not there yet. Bitcoin will end up demonetizing gold over a longer time frame. I'm talking about in the next 12 to 24 months. But I think the United States, listen, they have two bills on their desk. One is the Genius Act, the stablecoin bill. The other is the Bitcoin Act. If the US passes the Genius Act, which it looks like they're about to do, and then passes the Bitcoin Act, they send Bitcoin to being worth tens of trillions of dollars.
And the signs of this desperation are everywhere, Jack warns. Look at what's happening inside the Federal Reserve. Trump recently sent Jerome Powell a furious handwritten note listing global interest rates and scribbled, "You are as usual too late. You should lower the rate by a lot. No inflation." Trump's allies like Howard Lutnick are publicly attacking Powell too, saying he's choking the economy for no reason. The market already anticipates what's to come, as futures are pricing significant rate cuts starting in 2026, which Jack says is a clear indication that Powell will be fired and replaced by someone who will cut rates aggressively. But it's not just political pressure. The financial system itself is flashing warning lights. At the end of the quarter, the Fed's reverse repo facility spiked by $11 billion, its biggest move ever. That might not sound huge globally, but Jack says it's a clear sign that someone needed cash so badly that they had to sell their treasuries back to the Fed. That's a liquidity panic, plain and simple. Add in Besant's request for special exemptions and Trump's demand for cuts, and you can feel the walls closing in. Everything is bullish for Bitcoin, Jack says. Rate cuts, debt fears, capital flight, every road leads back to sound money. And at the center of this mess is a simple math problem. $40 trillion in US debt represents time and energy already spent, value that was never returned. It's a black hole created by decades of overspending and endless wars. Jack laughs bitterly at what one Republican advisor told lawmakers. You still have to get re-elected. We'll make it back 10 times with growth. In other words, don't fix the system, just print more and stay in office. Now, Jack isn't buying it. I'm gonna sit this one out, he says. That's why he says Bitcoin is no longer optional. It's the only money that reflects your time and energy without being stolen through inflation. It's fixed, it's fair, and it can't be manipulated by politics. Jack lives it. He earns, he saves, he stacks sats, because he knows the system is designed to drain you. Bitcoin doesn't need you. You need Bitcoin, he says. You don't have to wait for permission. You don't need to argue or beg. You can opt out. China has the minerals, the Fed is trapped, and the politicians are too busy campaigning to face the math. This is the escape hatch. If you ignore it, don't be surprised when everything around you begins to fall apart. The empire's desperate need for Bitcoin isn't just a signal, it's the final warning. Thank you for watching, and don't forget to like and subscribe.